I've actually gone through 88,000 separate businesses at this point. One of the biggest lies is that growth is going to fix your problem. Selling your way out of it has nothing to do with it. You have to profit your way out of it. We'll produce a minimum of a 2-to-1 return on investment within 1 year. Every decision they've made up to that point already predetermines what the profit performance has to be. Entrepreneurs in general usually have the guts to go out and start a business. Is usually from a point of pain. If you want to make 10 cents on every dollar, structure and control your company to only spend 90 cents. As you get promoted, you expect people to be just like you, to have that same work ethic or have that same vision or focus. I became a workaholic.
Welcome to The Business Game, the show that breaks business down into real levels, from $0 to $200 billion, so founders can see exactly where they are and what comes next. Today's guest is playing at level 7, which sits in the $150 to $500 million bracket, the global leader stage. At this level, the company operates across countries, cultures, and risk environments. The challenges? Multi-country leadership, international expansion, risk management, and early-stage M&A. The goal? Design a global organisation that can execute consistently across borders.
Welcome to The Business Game. I'm Steve Plummer.
And I'm Kalina Stano.
And we're joined today by Jay Aldebert. Jay is the Chief Growth Officer at International Services, Inc. And over the past 25 years, he's analysed more than 80,000 privately held businesses.
He's built his career around one core idea, that most business owners are flying blind when it comes to profit, value, and what their company actually produces.
Alrighty, let's dive in with Jay Aldebert. All right, Jay, welcome to the show.
Very much. Glad to be here, guys.
All right. So, Jay, tell us a little bit about yourself, about International Services, Inc., what you do, and how did you get here?
Okay. I'm Canadian originally. I started with this company when I was 25 years old. I started as a business analyst for the firm. For about a decade, I roamed all over the two countries, between the United States and Canada. We conduct, as an analyst, you conduct a 2-day diagnostic of a business. And so I had numerous frequent flyer miles, hotel points, etc. during that period of time. But I got to see a lot of North America that, that a lot of people don't. And from there, I got promoted and became a director of the firm and later on the growth officer. And so what International Services does is, it is a consulting firm. We obviously fix businesses, the small, medium-sized business market. We kind of target a minimum of a $2 million in terms of their revenue, up to maybe $100 million. Doesn't mean we don't go past that. It just seems to be the sweet spot overall.
Yes.
So we diagnose the business from a profitability standpoint, operations standpoint, sales and marketing, every aspect of the business, really like a one-stop shop, and make recommendations. Those recommendations can be implemented by the client, or they can sign up with us to design, implement, to educate them how to use it. Recommendations.
Incredible. So you've analyzed over 80,000 businesses and generated billions in outcomes, which is incredible. Why do you feel that there's an authority gap between expertise and visibility? And on that, do you feel that there's a gap between your expertise and visibility?
That's a very loaded question, but
let's dive in. Let's dive in straight away.
So the one thing, let's talk about the numbers for a second.
Sure.
The firm itself has produced over $6 billion in its lifetime. It's been around maybe about 7 years longer than I was with the firm.
Yeah.
When I say that it's the return on investment to clients, part of what we do is, because we can quantify mismanagement, what we're able to do is then know how to recapture that so we can quantify really return on investment. So one of the assurances we have is that we'll produce a minimum of a 2-to-1 return on investment within 1 year. It's a very bold statement, but the ability to quantify it is really the skill set that we bring to the table, and then obviously fix it. So The firm has analyzed well over 400, maybe closer to 500,000. But under my tenure, I've actually gone through 88,000 separate businesses at this point. Looking at 4 years of financials and operations now. As an analyst, I did that one-on-one with a client, and now I have 30 analysts only in the country, and they get to go 35 specifically.
Yeah.
And I'm the eyes on this side. I look at what I see based off of my review, analyze the financials, the operations, and all the intermingle. In terms of the authority, just the sheer volume. We'll just start right there. It didn't matter what your trade that you're in. If you've seen that, if you have that many at bats or that many case studies or that many, it just gives you things that are of the norm. And we're a little bit different than a lot of accounting firms or consulting firms. One of the primary areas that we don't agree with is that accounting actually gives you the capability of managing your business. And the most short statement as it relates to that is accounting is most accurate usually long after the games are played. In other words, it's a lagging indicator.
Yes.
And in terms of what we look at is what leading indicators are available to the client to be able to win the game. And win the game for us is that there's 12 games a year, right? There's 12 specific months, and the result is that they have to make profits. Where I'd say I'm more of an authority is probably my individual algorithms that I've developed over the last, 7 years of it, I guess. I was seeing things over and over and over again that were plaguing companies. And the more I looked for the ability to analyze this, whether it's from accounting software, whether it's from data rail software of some sort of like FP&A software, or that expertise lying in the accounting firms, it was not there. And as a result of not being there, I felt I had to capture it and be able to look at specific companies. If I may expand on that point just for a second, and that
yes, please.
But the bold statement I'll make is that you could point to any business at any point and say, tell me what that company has to do this year. See, the thing is every decision that business owner has made up to that day to the day I walk into a door of a client, let's say, I already predetermines what the performance of that company has to be. Mm-hmm. So what that means is it has nothing to do with whether they want to make 10%, which is the most common thing people say, or they want it to be at, $5 million in sales. What it really has to do, it's every decision they've made up to that point already predetermines what the profit performance has to be, what the gross margin performance has to be, and specifically what the sales have to be. And that's the competitive edge we have is we can do an MRI on a company on an immediate basis and essentially say to the client, it doesn't matter if you haven't done this before. Here's the math behind why you have to perform this way this year. And if you don't, let me show you the cause and effect.
Wow.
Yeah.
What would you say is the most sort of common theme that you see when you're analyzing? I'm sure there's a few things that you're sort of seeing that these businesses are kind of doing incorrectly or that you've had to correct. Is there a few that really stand out to you?
And specifically what to say, and if I was going to say the one that plagues the most, it is the misunderstanding or lack of understanding of two major concepts, which I would call the death spiral, is debt service and their understanding of the concept of debt service, because CPAs don't track it. They may look at CPAs being accounting firms. They may put it on the balance sheet as current portion of long-term debt, but they're not explaining it to the clients that that's the minimum mandatory profit your company has to make this year. Yeah. A lot of people don't understand that. Like if you've got $10,000 of debt, since it's not something you can write off, but that check is coming due, you have to make that less than taxes in January. So that's one of the biggest plagues is they make all these decisions. I'm going to buy this equipment. I'm going to buy this truck. I'm going to get a line of credit. Whatever it is the decisions they make, they put them in a debt situation. Nobody informs them that your company needs to make a minimum amount of profit every month just to service that and break even from a cash flow standpoint.
Yeah.
That's number one. Number two in the plagues them is the understanding of working capital. People may recognize those words. They may think that means cash. But the ability to measure working capital required in a business versus working capital actual, and understanding that every time you miss the debt service number, it essentially erodes your working capital. And you get to the point that you actually can't fund new sales anyways. That frustration lies with so many clients that these things are happening and they feel a cash crunch, but they can't see it because it's not included in their accounting software. So they just simply say, I should be able to sell my way out of this. And that's one of the biggest lies, is that selling your way out of it has nothing to do with it. You have to profit your way out of it. That's the only thing that's going to work.
Yeah.
Well, people,
you mentioned a really interesting term just before, Jay, was that you quantify mismanagement. Like, ouch. Ouch. As the leader of the business, right? You're going to give me a number of how badly I've done things, essentially. How do clients and prospects, how do they, I guess, respond to that? Do you get some pushback, or like, well, we did that because of this and you don't understand? Is that a difficult thing to, I guess, to negotiate and to move a client through, or is it just a simple case of, look, the numbers are there, right? And that's because I guess I'm going, because entrepreneurs, right, business owners, there's a bit of ego there. There has to be to do that, and you're basically saying, well, look, the numbers are saying we've got to quantify there how much you messed up. Can you talk us through that part of it?
Yeah, little robots that we could just reprogram, that would be fantastic. The job would be done inside of an out, right?
Yeah.
And the reprogram. What you are dealing with is, with entrepreneurs in general, we deal with, any construction trade, manufacturing, trucking companies, your heartland kind of entrepreneurs. And most of them have traded, educating themselves first and foremost in terms of business acumen to jump into the trade and the passion they have, whatever it may be. So in that light, a lot of this stuff, you're not starting at like the concept of, let me just show you numbers. You're starting at the very concept of, let me show you what a profit and loss statement is, what a balance sheet it is, what it does in your business, and what your accountant's talking about when you guys sit down once a year. Mm-hmm. From there, we've got to move on to then, okay, let's look at things you should be measuring as an individual. But more to your question is that it's probably 65%, with just your guesstimation, of what you do with a client is psychological. Yeah. I've got to read very quickly your personality style. And I don't know if you are familiar with Wilson Learning Center or Myers-Briggs or the DISC system. Yeah. Those are identification of personality style, usually a derivative of birth order, right? Birth order really has a large impact on your personality style. Yeah. Mm-hmm. And to me, personality style is a language. And if I can be super charming in English, but you put me in Spain and my same old lines don't work, right? Yeah. So your ability to identify a client's personality as fast as possible, to know how they will consume information, is one of the teaching assets that we have here. That is one aspect. So if you're a firstborn male in your household, the chances of you being analytical are very high. So how I'm going to go through all of this aspect is I'm going to go through it in a methodical manner. If you happen to have a sibling within a year of your birth, that's a competitive atmosphere, which makes you a driver personality. So I'm going to have to show you how to be bigger, better, very, very quickly. So that is a huge part of it, is identifying, speaking the right language. But here's the last one that I'll tell you is the, I'm sure I always pronounce it wrong. So Carl Jung, I can be charming in English. You've heard of shadow driver place? Yeah, shadow driver stories. Yeah. No matter how many times people correct me, I'm not going to really change.
That's all
it's personality driver. And essentially, entrepreneurs in general usually have this occurrence. The guts to go out and start a business is usually, believe it or not, from a point of pain. There's usually a significant emotional event that has happened in their life. Yeah. And it creates the spectrum. In the spectrum, it is fear and greed, and like what I like to call zeal. Okay. So somebody's hurt them along the way, said they're not going to be amount to anything, they're not going to be good enough, whatever it is. If you really dive into it, and why I say that is because 99.9% of the business owners we talk to, we get that story. Their father said they're not going to amount to anything. Is getting that storyline on them and figuring out what their biggest fear is, which is their father would ever be right, about them. And their greed is to prove them wrong. If you can just harness that and show them that every tool and every number I'm going to show you and every thing that is mismanagement where your ego wants to flare up, just understand that the reason why your company is showing these specific things is because you don't have these tools and you're mismanaging. And if you just do this, you're finally going to prove your father wrong.
Yeah.
That sounds like manipulation, but it's really capturing that fuel to actually change behavior.
Yeah.
Yeah.
I love that. So how do you find, because they're kind of intimate personal details about someone, do you sit down almost with a checklist and go, right, where were you born in the family? Was there something or does it come out more in a organic way? Because obviously you guys are obviously pretty good at that. So can you talk us through that process a little bit?
So I say methodology, and the methodology is a reciprocity position, right? The reciprocity position is that if I'm vulnerable and unveiled, right, the chances are that you will be vulnerable and unveiled. So the first thing I would say is I'd say, Steve, before we go any further, I have to ask you a question. Why is it you get up and go to work every day? And before you answer, here's what I would like. This is the answer I'm looking for. I used to work for a firm named Jay Aldebert and Associates, happens to be my mother. Long story short, working for your mother, it's not the greatest. You work long hours, you get paid nothing. And every time I would bring up an idea, the idea itself would be squashed by saying something I did in my youth would have probably saved her more money than whatever suggestion I would bring up. To negate this, I went to one of the other consultants that worked there and said, hey, if I bring up a good idea, can you give me a favor? Can you bring it? Because you see what happens every time I bring it up. And it worked. And it worked for 3 months. And long story short, she found out, she was embarrassed, she was infuriated. She came to my office and she said, I'm going to free up your future. Go ahead out in the world because you are born to fail. Nobody understands you the way I do. Nobody understands your strengths. Nobody understands your weaknesses. So you're going to go from job to job to job and fail. I woke up the next day, we'll call it depressed, sad, upset. She might be right. But I then slept one more night and said, I'm going to prove you wrong. But you will be now sharing that with a client and being able to be unveiled in the story. It's just so we're clear, it's true. But number 2, it is being able to show significant emotional events that I'm striving every day, no matter what success I meet in life, and never ever that you are the hero at the end of the story, because that gives a little bit of resentment, like, and I became a superstar and that's whatever atmosphere. You can't do that. You've got to give them the capability. And then I'd say, Steve, so why do you get up and come to work every day? And that story, not a problem, comes out. Give more money than whatever.
Wow. It's powerful, isn't it? Yeah.
It is. That's
So
I love that. Yeah.
I want to jump into your level that you're working at in terms of your business. So you're operating at quite a high level, that level 7. So what do you think that founders maybe at that level 5, level 6, just below where you are now, completely misunderstand about what it takes to operate where you are now?
Well, I don't know. It's going to sound strange, but I don't think that level 1 through 7, believe it or not, are any different. It's do they design the profitability? And volume in most cases, which is the focus of every entrepreneur, can damage the business just as much as it can help. The problem is that growth in itself, not only are there so many constraint points of growth and capacity issues that occur, but it also is that you almost have to keep going. Like the floor kind of closes out and you have to go to the next level because you're adding headcount, you're adding, overhead, you're adding all these different aspects. And you can't go backwards really. If it's a privately held company, you can't really go backwards because you're just chasing the beast at all times. So I think the biggest thing is that instead of, I wish the world bragged about how much profit they design versus how much revenue they produce. Because that biggest concern about every level of company. I think that's what they're missing. They're treating profit as an afterthought, as a product of whatever revenue they produce, as opposed to designing it completely backwards. And I've seen that at $100 million companies, $200 million companies, that they have to keep on. It's almost like a drug. They have to keep on that revenue generation to just mainline and stay the same. I don't.
You're right about that, because whenever you talk to a business about, what did you do last year, and they'll give you a number, and if you dig a bit deeper, it's always revenue, right? It's never profit. It's the first thing they say. Which one thing I find really interesting about what you do, Jay, is that it's kind of a counterintuitive thing. You say it's all about measurement. You also say you're anti-accounting, and that's a real bit of a hang on. How does that work? Does that resonate with people you talk to, that anti-accounting thing, or do you have to explain that to them?
It's the numbers themselves. Everybody would formulate it as accounting, but there is I guess the best way to put it is, accounting captures what happened. I'll give you an example just on pricing model alone. Okay, you take any product or service. There's three main categories that people buy, add margin, and sell. Like material would be one of those, labor would be one of those, subcontract would be one of those. Those are the three main, and some sort of combination of those. Although they're the author of the formula, right, that they put together, whatever it is, they know what their market will bear in most cases based on their product or service.
Yes.
And they become the author that produces really what the margin they're going to build into it. Well, once they do build that, the very first question that I see that is impossible for most of them to answer is, what is your gross margin? Now, that's an accounting term, but what is your margin in general? Very rarely can people actually tell you. Like, in other words, what was their intended base at whatever formula they put together? What they can tell you is they can tell you what showed up in a profit and loss statement, either last month or last year, okay?
Yes.
So to me, if I'm saying, because I saw 25% show up on the profit and loss statement, that my gross margin is 25%, the thing I do is actually walk through their pricing model with them, take all their direct costs, add the margin to it, go with intended revenue, and show them very specifically, no, your gross margin based on your pricing model was actually 35%. So there's a way of actually figuring out what they built into it that doesn't show up in accounting. Of course, this shows what actually happened. Just a small example, but that's why it's kind of anti-accounting, because that guy would go, if that happens to be the best number that they've seen any month or any year, it's always hovered around 23 and they got to 25. Well, they think they've done good. But 35 was what they built in, so it's not good.
Yeah.
That's where the anti-accounting comes in.
Yeah, I love that.
Wow, that's great insight, isn't it? Yeah.
So the three.
Let's talk a little bit more, or dive in at least, to some of the tools you use with your clients. You've built the return to owner framework. Can you tell us a bit about that?
Based on a lot of the algorithms that I was seeing, like the things that were played in companies. And what I had to do is, first and foremost, you have to make it easy for any level of education of entrepreneur to understand, right? So you have to be able to explain each math equation of how you got that number. Well, what I saw was there was 5 main areas that have a cascade effect on each other. I'll give you an example. If a client has a debt service or working capital deficit, then their minimum mandatory profit is hardly predetermined, because if they don't make that number, they're damaging their company. So that was one of the very first areas that I wanted to have a look at. And that's more on the crisis side of the spectrum. On the opposite side of the spectrum, just because the minimum mandatory profit isn't servicing something like that service, there also is the value of the company, right? We're talking about really what the profit it produces is the value of the company. We could be looking at the retirement funding. We could be looking at lifestyle, whatever it is. To me, it all boiled back to, there was 5 elements that created a minimum mandatory profit that that company had to produce. On the option side, right, between between owner's comp and increase of value, those are more green areas, and usually they don't have as much of a emphasis on behavioral change that the fear items actually do.
Yeah.
The second area I looked at was everybody likes pro forma, right? Everybody likes taking a overhead budget, doing a pro forma of it that says, if I grow 10%, then I've add 10% to every one of these costs. Some are semi-variable and some are general administrative. And what I found was you could actually, you never hit break-even sales if the target's always moving. In other words, if I'm going to grow 10% and I'm adding 10% to all my budget, then I'm not hitting a break-even. And break-even, even though people know and have heard that, they have this cognitive dissonance of what it actually means. Mm-hmm. So what I started looking at was overhead as a return on investment. I'm going to spend marketing dollars. What's the return on investment I'm getting from every dollar I spent? I took that and then placed that all the way across by measuring 4 years of financials of a client to come up with a standard that actually stated this is the number of dollars you need to spend in each area at this volume of revenue. What that did is produce between the minimum mandatory profit and the overhead. It gave me a minimum amount of gross margin dollars that company had to produce. So what you're noticing is I'm building the company or engineering the company from a reverse engineer. Yeah. Now knowing I have to fill this bucket that is hypothetically 1.2 million, I'll just use that as a round number. They had 200,000 of minimum mandatory profit. Their overhead budget actually equaled $1 million. I then went through the pricing model and I said, okay, what is the client's pricing model? And if it has an intent 33%, then now I can substantiate the break even. The break even in this particular case on that is 3.6 million. Mm-hmm. Well, what it also does is now shows the cascade effect. Rather than saying it the opposite way, saying, okay, well, if we mismanage overhead or if we mismanage direct costs, look how much the profit reduces. I built it the opposite way. That said, if there's a minimum mandatory profit this company needs to not hurt itself, then the cascade effect is it only affects one number. It affects break-even sales volume. So every decision they make to manage or mismanage or not manage or whatever it is, that you can actually show them on a regular basis how that break-even sales is moving. I know it's a little long-winded, but it's building the cake backwards, administrative, and what I should tell you exactly what the performance indicators at 5 separate layers that the company has to do. And it's made up of 11 biomarkers that are filtered into all of those. And
it's very counterintuitive what you're talking about there, yet it almost makes sense.
It makes more, it does.
Counterintuitive like that. I'm just curious within that framework and across all of the businesses that you consult to and have analyzed, is there something that, I know it's hard to generalize, but is there something that most founders are completely blind to?
So I've measured, the biggest one is more on what we've kind of already said a lot of, is I use this analogy and I'll use rugby, right? Or American football. Those are the two sports that people would know the most about, or most popular, I guess, overall. Yeah. And the only reason I use those is because they score a lot. If you watch the coach come out with, let's say, noise canceling earphones on and a blindfold, okay? You watch that coach come out and they couldn't hear or see what the score was. There was no scoreboard. There was no time. There was no indication of, what quarter it was in or what half it was in. But their responsibility was still to call every play. Either the break, every play, every case, all play, every play. And the only way they were ever going to find out how they did was after the game. Mm-hmm. So now they're going to set scoreboard, and they would find out if they won or lost. Mm-hmm. So that to me is one of the biggest plagues that I see with small, medium-sized businesses, is that even with accounting software, they could have the greatest internal individual that was reconciling everything at all times. The most accurate picture they're going to get of how they did is after the game was over. Managed.
Yeah. Wow. It's a really good analogy, right?
That is a great analogy.
It might be a bit uncomfortable for people listening, like, ouch. Well,
but it's important. Yeah.
Hey guys, just a quick break to thank our affiliate partner, HubSpot. We are thrilled to announce our partnership with HubSpot, the ultimate all-in-one CRM platform. HubSpot helps you streamline marketing, sales, and customer service with powerful tools to grow your business faster. From lead generation to automations, it's got you covered. By using the link in the description, you not only get to start your HubSpot journey for free, but you'll also be supporting our work here on the show. Now it's back to today's episode. Yeah.
You talk about 7 lies that destroy businesses. Can you talk us through what those lies are? And in your opinion, which is the most dangerous one?
Filtered in. Okay. The first one is, we've touched upon this, that growth is going to fix your problems.
Yes.
You have the issues. You have constraints that if you don't know them and you don't grow by design, it's going to hurt you just as much as if you ran out of sales.
Yes.
So that's the biggest lie. So that's not the biggest, I would say. That's the first one I would mention. The second one, obviously, we've kind of touched upon this as well, is that accounting, that my numbers give me control, right? It does. That's the second one. The third one is that it's their banker is their friend. Really, no, they're associated with covenants, right? Your friends, as long as you're doing okay. As soon as something happens, well, relationship changes, right? The only reason because I guess the fourth area of the lie is the most common, is that industry-specific consultants are what I should look for. And I'll give you the difference between a mechanic and an engineer. A mechanic can come in and fix a specific area based on their training, and another one can come in and look at a different part of the machine. But re-engineering the whole thing so it works in a harmonious way is a completely different animal. And so I'm not attacking them. I'm just saying they have their place. They're part of a micro as long as you have the macro play them.
Yes.
So that would be the fourth. The fifth area that is outlined is that giving bonuses, right? This is the thing, bonuses that are given out. Now, reason to think bonus, that I'm saying, don't give your employee bonuses or incentives. People don't know how to calculate really what excessive profit or excessive performance is. I don't see that a lot. And they attempt these bonus structures or these incentive programs, and they tend to fail and not give them what they want. So if they, we talk to owners and they're like, oh yeah, they think we're attacking their leadership when we say giving a bonus at Christmas makes 0 sense. If I'm your employee, I'm going to start behaving the way you want around November overall. And in terms of knowing what amount I'm going to get, I don't know what that is. So therefore, I don't know what level I should really exhaust myself. And if Steve gets, or Kalina gets the same as I have, but I've worked twice as hard as she has, or then Steve has worked nothing, we all get the same, I've just actually hurt my corporate culture.
Yeah.
So really looking at bonuses and incentives and really having a tied performance, when the owners kind of say, I'm taking care of my people, that's a lie. The other area that I would content is that owners lie to them about the value of their business. Their banker, value of their business, and I don't know if it's the same worldwide, but the value that a client thinks their business is worth versus what it actually is worth in fair market value is usually 4 to 5 times difference. There's always. It's kind of like asking somebody about their grandchildren, are they the smartest in their class? Absolutely they are. Are they the best looking in their class? Absolutely they are. What's your business worth? $10 million. Okay. Well, you only produced $100,000 profit last year. How do you quantify that? So that's another lie to have. So there's these lies that affect business owners, not only the ones they tell themselves, but that they're kind of told, that really affect the outcome. So it's not, I kind of feel bad because it's not really their fault. Like it's publicized, like grow, scale. Yeah. Everywhere you look on social media, you're going to see it. Yeah. Get the best accounting software, know your numbers, get the best accounting software. Well, it's a lagging indicator. Your banker is always going to take care of you until you don't pay them. You start missing 2 payments, those are the aspects. The last one is peer groups. People go to these 2020 groups all the time. Some of it's for the social aspect. I get it. they get into the same, they're in the same battle you are, right? Because they're in your same industry and they're running your same battle. But one of the things is that when they start talking about the financials of their company, it's an ego-based value of putting numbers up. People boast about numbers that they did not even perform. So if you're expecting to learn something from a financial acumen position or to learn something, nobody's there to help you. They're your competition. They can be as nice as they want to, but they're going to give you inflated numbers that are ego-driven that you're not going to learn anything from. So that would rather know the 7 lies that I would say that business owners need to tell themselves so that that they believe obviously helps them. I don't know.
Wow. And I think all of those, you've nailed all of those, I think. Yeah. Just on that though, have you ever felt personally that you've been close to believing any of those lies yourself, in your time in business?
I heard my call. I guess the big one before was growth, right? The growth aspect. It's even if you didn't have a way of tracking numbers, if your house, let's use your household for a second. If I just turned over, and I'm not being not indicating gender here, but if I turned over my credit cards to my girlfriend and said, "Get whatever you want," that's not a problem, and I always have to make more, right? Well, that really wouldn't be a good budgeting plan. But one of the things I've looked at is, it seems like if you have exponential growth over and over and over and over again, the chances are you're going to make more money. And the reason why is you're getting more organic. You can't catch up in terms of headcount or aspects. You kind of get this organic stretch of and productivity reset. So I do believe in that. I did believe in that lie for a period of time until it had impact on our company maybe over a decade ago. And it was that learning that floor all of a sudden made it that we couldn't even dip back a little bit. We always had to have this exponential growth. Yeah. And it's funny because we're consulting from the dealt with it and we're focusing on growing so much instead of the infrastructure underneath. So I have had a period of time when I thought growth was the answer instead of design growth.
Yeah, I think that growth piece is definitely tied to the ego as well, which is pretty much linked to most of the elements of those 7 lies, is that ego of like, okay, I must grow because it's rewarded in society, especially on social media. That's really pushing that agenda.
So what's nobody employees do. People talk about those again. Nobody talks about profit. And I find that so strange. Like, why is that a more sacred number to talk about as opposed to your top line?
Yes.
Like you're willing to reveal that you did $5 million, $15 million, $100 million, but you're not willing to say that. I think because in most cases, there's more cash flowing through a business than there actually is profit.
Yeah.
You know what I'm saying? So I think that's the biggest case. But I learned something.
Yeah, I love that term too, growth versus design growth.
To learn,
right? That's
nobody's there to
because you're right. The buzz is that I've got to grow the business, versus designing it so it grows the right way at the right speed and so forth. Really interesting. And just on that,
got it.
No, you go.
Tell them the book that gets you there is the quote that has to change, as they say. So, in other words, like I get that without any type of sales, when you first start your company, like it doesn't matter if you have the greatest systems and measurements in the whole wide world. Sales is not going to work. Yeah. It's just being able to change that into then doing it by design once you hit a certain threshold. And to me, I think that's probably depends on the trade, but you could say $1 million of revenue is pretty much that point where you got to focus on now doing it by design. If you didn't.
Yeah, cool. Joe, I want to put you on the spot a little bit here. I'm really interested in what you'll say here. So drawing on your broad experience for a moment, can you give listeners, your one non-negotiable piece of advice that they can implement in their business today to get them on track, producing that healthy long-term type wealth?
I think until you develop a financial skeleton, no matter where you are in the world, there's only 100 cents in the dollar, right? I guess that's a wrong statement. If you're in the United States, there's only 100 cents in the dollar. Well, let's put it that way. Over again. And meaning that there's the chance of 100 cents in the dollar is if you want to make 10 cents on every dollar, structure and control your company to only spend 90 cents. I know it sounds reversely, but like, you can't just hope it's going to happen. Design it. 10, 15, 15, it's 85. Do it by design. That's the biggest area that I would say that I would impart to is people will like, I have a daughter who's 14 now, and, you asked her what at different ages, I asked her, what do I do? Right? You always want to get the perception. I think it's kind of cute listening from a 5-year-old or whatever it may be. And she was watching Dora the Explorer, and it sounds so ridiculous. And they were going through a lemonade stand. And the lemonade stand was going through that. If the lemons cost this much, and the sugar costs this much, and the cup costs this much, how much profit do you make? And if you want to make this much, what would you have to do? And I'm like, they're teaching it on Dora the Explorer, which is a cartoon for kids here, about a lemonade stand. And they're essentially making profit by design. And business owners themselves, and I'm not saying it's as simple as a lemonade stand. I know there's lots of complexities, but the ability to sit down and figure out if you need to make 10 cents on every dollar, structure the company and only spend 90.
Yeah, that's great. I want to change track for a minute.
Okay.
Let's look at your own journey. So what did you personally have to stop doing or start doing to become the leader of your business at this level?
I think I would probably say that one of the biggest things was empathy for me, if I'm going to be honest. No matter what, it's empathy.
Wow.
It's what I was going back to that story where I was told I was going to fail.
Yeah.
I became a workaholic. And as a workaholic, what it resulted in is that I was always about performance and behavior, and always being, at work and put in the extra hours and do all that kind of stuff.
Yeah.
And I think as you get promoted, you expect people to be just like you.
Yeah.
To have that same work ethic, or have that same vision or focus, and not that their work ethic is any different. It's just from a standpoint of they have different value systems. I think the biggest change I had to do as I got promoted and moved up through the company is I had to learn empathy. I started very young. I didn't have a family. I didn't have children. So anybody saying, well, I got to go home and take my kid to the dentist instead of working, I was reacting to it. It actually probably brought to question the promotion in the first place, because I was having so much friction.
Yeah.
And I just realized that I've got to get the best out of everybody. I can't manage everybody just as if I was managing myself. They're all different. They have all different value systems. And I got to be empathetic to really what that value system drives. So I would say that's where I got tripped up a little bit at the beginning, and I've had to flex. I'm not saying I'm even great at it now, but I'm just a little bit better. It's 10 cents.
Yeah. So just on that leadership journey, Jay, how has your leadership evolved going from, managing operators to managing more executives?
I think the biggest aspect was, I found that I needed to be able to give people a voice at all times. In the room, no matter what room you're in, it doesn't matter if it's operators or if it is executives. But I also had to be able to show them a clear path. If I'm not passionate about, if I'm not convincing about the direction I want to take, then nobody's going to follow me, I guess is the best way to put it. If the lemon, I can't turn the sugar and glide things on, and I can't just make arguments for the sake of being argument. I have to actually be passionate and believe in it. And I think that is the biggest asset that I've used to lead that group of executives.
Yeah.
And they're such.
So just on that, also the evolution of your leadership. Looking back, have you got any tips or advice for people on their own leadership journey about being proactive about it or intentional about it, and what things they might do to become better leaders?
If we talk about, dealing with owners and operators, and we talked about that story, I get to know everybody's story. I actually do it with executives too. I do it with any employee that I'm interacting with and have to do a project on. I want to know what makes them tick. And it allows me to understand their value system a little bit more. But one of the basic questions is being like genuinely curious about them and where they're driving to. And I think that itself helps the collaboration, because they really do believe, and I do believe, that you're trying to make them better, whatever better means in that particular measure. So I would say that's the biggest, get to know really what drives your employees, drives your executives, and figure out how everything you do on a daily basis can get them further on that path. Figuring out their shadow driver story is a big one. Sometimes that's invasive based on the type of employees, but if you can get to that point in a relationship where they will be able to build, I feel it'll follow you anywhere. They had to do.
Yeah.
I really like that, how that has evolved for you, because you're big on the numbers and the measurement, but you don't neglect the human in that. In fact, it's almost at least initially an imbalance of the human over the numbers, and that you get to the heart of of why there might be that quantifiable, what it's costing you. Quantifying that, it gets back to the human driving it. So. Yeah, just a comment from you. It's fascinating the way you do that, the way you go about that. Yeah.
With managing that, to move another human being, right? To move another human being, you really have to get to know and understand them.
Yeah.
And again, that could be just making sure somebody does something on a daily basis, not be late as it relates to it, or, another. And I think that's extremely, psychology in itself is getting people to get somebody to move, you have to kind of change their value system as it relates to whatever it is we're talking about.
Yeah.
And I think that really is the first step in good management. And I think
absolutely. There's a lot of self-awareness, Jay, and I think that you don't get to where you are now without having that piece. Do you think that there is a time where maybe you had an approach that you perhaps resisted for too long in your leadership? And if so, what did it cost you?
I know it's going to sound like a basic thing. I wouldn't ask people about their kids. And you're going to say, like, what does that have to do with business? About, I would take that you seeing them as a worker is one level, right? You seeing them as a family person is a different level.
Yes.
One of the things that I kind of put in place is all my employees, I do have a private Facebook site, and that private Facebook site itself has, in other words, the general public can't see it. Their spouses as well as them on there. And I use it for announcements of performance, like performance being measured on a daily basis or a weekly basis or something like that. I think the more that it's the spouse, whatever that may be, is behind them at work and knows that we're cheering for the same person. We're genuinely cheering for the same person. I think that becomes an asset in that relationship. And I think that it took me a while to get there. And I believe I think it cost me probably some key employees who just felt like, we were driven by numbers instead of that we were actually fairly cared about, what happened. I think it probably cost me in terms of, I didn't have the spouse on it, thinking we're on the same side, that we both want their individual to win, sort of thing. And I think that probably caused friction on many different levels that, took away from performance. Whether it's, how much time they took off or more time they took off or, always an asset. So some of it's not very quantifiable. Yeah. But I think that when I kind of understood that more and saw that side of it, I did see a performance increase when obviously that became important to me. So
that's incredible. That's a great idea.
Yeah. So we haven't heard that before. Right?
No.
We do a lot of these interviews, and that's one we haven't heard of.
No.
That private Facebook group. So, Yeah, thank you for sharing that. Can we talk about, going back to the growth thing, can we talk about growth? Because everyone, as we said, it's what entrepreneurs want to do. They want to get to the next level and so forth. So just reflecting on your growth journey, what almost broke as the business scaled into that enterprise level complexity? Was it systems? Was it people? Was it decision-making speed? What almost broke, and how did you get through that?
It's probably scaling itself has capacities that you can measure. There's capacities you can't measure. To move another, one of the is, believe it or not, was the internal ERP system and the ability to, it was kind of like, it was adapted over a period of time. It wasn't engineered for growth overall. I guess is the best way to put it. That was one of the biggest areas that had huge impact on us is we had not put a value system around it. We didn't think that it really brought a tremendous amount of benefit to the company, the ability to track, measure everything, even though that's what we tell our clients to do. And at different intervals based on that growth period, is not reinvesting into the internal infrastructure. We kind of downplayed it and said that's not a revenue generator for us. So as a result, a couple times in different areas, it's had a major trip up for us. So I don't know if that's what you would see as a major trip up, but it had a big impact at different intervals during our 32 years.
Yeah, absolutely. I mean, there's no right or wrong necessarily answer there. Is what really dropped in for you, in that journey, because that's for different businesses and different markets, it will be a different thing. And so people will learn from, that answer is, gee, what part of that do I need to do in my business to stop that tripping up or that slowing in growth? So is there something around that I don't know, might be a bit of a shortcut that people could adopt or adapt or implement?
It really comes down to knowing the score at all times. And the score at all times, there are things that you should measure. There's things that you shouldn't measure. There's things that make you feel comfortable. And being able to seek counsel as fast as possible and being able to understand what's the important things to measure. I'm trying to frame up the answer, but it's people become comfortable measuring what makes them feel comfortable, even though it may not be the right thing. Mm-hmm. And so we're cheering, being open to say, this is what I measure my business to feel confident, to feel secure. Mm-hmm. Am I doing it around? And being open to that conversation, I guess, is the very, very quick step. People measuring, like, I'll give an example. Somebody says to me, well, we bring in $200,000 per employee in terms of revenue. Well, that in itself, I don't know where you can take that equation any further to really give you any type of profitability matrix, I guess. It doesn't really tell me anything. It just tells me that felt comfortable to you. Mm-hmm. So being able to be open and have that conversation and say, what should I really be looking at? I think that's the advice I would give to any business owner that is listening on here. And there's an old argument that you hear that profit's not made in the office, it's made in the field. I hear that a lot from business owners. I think you've got to value both the same. Mm-hmm. If you downplay one, it'll bite you very, very quickly. Increase to see that, but you understand your business, know the business of the business. So whatever your industry is, whatever the industry knowledge, you've got to be able to match it at the same level with the business of the business.
Yes, absolutely. Just on what we're talking about, what almost broke you in business in terms of, a system or a structure. On the flip side of that, was there something that you believe you did really well that helped accelerate your growth or made the difference, or higher perhaps?
Yeah, I think if I may say, COVID really was a check and balance for an in-person company, right? We're in-person at all times. And I think that when we look at the number of employees that we had going into COVID and the revenue we were producing, first and foremost, we had to make immediate changes since we weren't allowed to be in front of clients. But I think what it did is it gave us time to sit down and assess our own business, where we got a little fat in certain areas and really look at what's the return on investment we're getting from employees.
Yeah.
So the ability to look internally for a short period of time, it's something, again, the saying is like the mechanic's car at home is usually not as well repaired as, or the cobbler's kid's shoe or something along those lines.
Yeah.
It gave us time to reflect, look inwards, look at really what our headcount should be, really where we needed to look at where we were fat and happy. And I think that was the biggest thing. And from there, we actually took off right after that.
Wow.
We actually, we've had the ability to, I won't go into detail of it, right, but to actually do in-person analysis and consulting about 3 weeks into COVID.
Ooh.
And we were able to continue doing business. So that 3 weeks, looking inward, trimming down, and being able to, we profit that we produce now is dramatically higher than probably decades in the past per dollar basis. So
incredible. It's amazing what happens when we take our own advice.
Yeah. Yeah. It is. It's the house painted with the worst house.
Yes, yeah.
Yeah. Yeah. All right, Jay, I know you said earlier that you don't find there's a major difference between challenges at each level, but someone listening to this who's at level 5 or 6, and they're now trying to build their organization further to level 7 and beyond, I don't want to oversimplify things. What's a cheat code that might help them get there faster?
You should see, in terms of, again, and not to be combative as it relates, I know we quantify this level 7 and level 6 and those aspects as important, but it almost goes against what we've kind of talked about for the last minute, right?
Yeah.
I would say concentrate on the profits. You want to be more successful.
Yeah.
The top line itself is really not the accolade. It's what profits you produce. So if $4 you have about how to build internally, and maybe I'm just blind to it, and people will say, no, I have to be a $500 million company or a $300 million company. I think make sure that you make the $1 million in profit, $10 million in profit. Where that is the badge of honor. Focus on that, how that's going to happen, not the top line. And again, that doesn't answer the question directly, but it's what I'm passionate about.
Yeah.
And maybe that is the answer, right? Maybe a listener has gone, actually, I need to focus on profit, just my revenue. Maybe that is the answer.
Yeah.
So
what's the great answer. So you're operating at a level where every big decision creates a second order problem. So, and that's at any level, correct? What's a decision you know you need to make right now, but you're deliberately putting off because of the problem that it's going to create next?
Bite you quickly. I'll frame it up this way, just so I don't get in trouble with my employees. Business. For in this business, we'll take the analogy of baseball. In the game of baseball, if you bat, let's say 350, which essentially means you're hitting every third. You're hitting a base hit every third up that you have. Okay.
Okay.
So let's just understand that case is that a lot of people have used an old methodology in our company that give them a very high batting average at whatever they do. And one thing that it's looming is there is a change that should occur in the organization that I'm avoiding because I know it's going to increase staff performance overall, but it actually puts people in an awkward position. So in other words, if you do it one way and your performance is, let's say, a B, and the average is a B right across the board, I think that's great. But now telling the person who has really become accustomed to doing it the same way at all times and say, no longer can you do it that way, you got to do it left-handed, let's say, and it will make you an A. We're kind of avoiding it because we think it might have a negative impact while they're learning to do it the right way, even though the right way itself will give them a much higher performance.
Yes.
So I'm kind of skating around it just in case, because my boys are probably going to watch this. It's mandated. If they watch it.
Like, did I hear pay rise come?
Yeah.
The biggest thing is when is it appropriate to make a major change in your corporation, even if it's for the better. It's a difficult decision because of the interruption and the structure you feel it's going to bring.
Yeah.
And how to go about taking each individual, not just a macro, you got to do this and do this from here on in, but actually, again, figuring out the value system of everybody and why they should become uncomfortable for a period of time because of how much free we have it.
Yeah. Wow.
Continue to, I kind of said, not a lot by saying a lot, but I think you have the point.
I can read between the lines. Yeah,
Totally.
very cool.
Yeah, I did not hear pay rise coming for all employees, though. I didn't hear those words. Just so we're clear, if you are listening. Yeah. Quick fire question.
I think so.
Right. Jay, one of the things we do on the business game to get to know the person behind the microphone is to fire 10 quick questions at you, and we ask you to respond in a sentence or a few words. And they're things about, what's your coffee order and things like that, just so we get to know who you are a little bit deeper. So are you ready to go, Jay?
So,
yeah, all right. We'll go gently again. We'll go gently. Yeah. You ready to go, Colette?
Yes, I'm ready.
All right. Would you like to fire?
I will lead. All right. Are you an Android or an iPhone?
Okay. What's your coffee order?
None. Don't believe in it.
There you go. Office or work from home?
Yes.
What was the first job?
Paperboy. Blades.
One piece of tech
I know there are paper.
Yeah.
Love or sell.
That's so cool.
It,
one piece of tech you couldn't live without.
It's almost cool. Now, AI.
Yeah.
Close to really rise. If you call it AI and code, yeah. The top one.
Yeah. AI. Early riser or night owl?
You have about both. I decided sleep is not important right now, so I burn both ends, as they said. Or
wow. Without coffee, incredible.
Yeah.
What's your go-to productivity hack?
Sure that you dangle a brass ring. You know what? People want recognition overall, and I think that's the biggest one. I'm sorry, it's a long answer, but
nope.
Putting a brass ring out there, no matter what it is, and making it public, I think is the biggest productivity increase.
Mm-hmm. Best investment you've ever made?
Yeah. Investment I ever made. I would say a big green egg. It's a barbecue. It's a smoker.
Oh, yes.
It's
my brother-in-law.
But there is a lot of money made around that big green egg.
Yeah. Okay. Interesting. Yeah.
What's your book or podcast recommendation?
Look, I really am a big fan of Never Split the Difference, that book.
Yeah.
And People's Styles at Work. And of course, my own podcast would be the recommendation for sure, but I won't use that plug right now.
It's an open question. You go and drop it. What is it?
What is your podcast?
We're called the Chief of Growth Podcast.
Oh.
It's on YouTube and LinkedIn. That's where you can find it. So, sorry.
Fantastic. What's if you weren't doing what you do now, what career would you choose?
A lot. Restaurant. I own a restaurant.
Okay.
There you go.
A company.
All righty. And last question. If business truly is a game, Jay Aldebert, how do you define winning?
In that it's one word, legacy. And that I love. Will you be careful? That's the way. Will you be remembered? It's not all about the wins, it's about the impact you had on as many people as you possibly could. Not only in your organization, but so I would say, to me, there is 4 levels of success. First is the quality of the work you provide, the money you make from it, the quality of life you have, and last but not least, legacy. So the ultimate win, to me, is legacy. the same way.
Fantastic. Yeah. Jay, thanks so much for your time and sharing your expertise and your vulnerability as well. There was some really big gold nuggets that you dropped during this episode. So thank you very much.
Yeah.
Where can people find you online, Jay?
Right way. On all my social medias, I actually am constructing a website right now, but all my social medias, anything from Instagram, Facebook, LinkedIn, YouTube, I'm all over the platforms, website under construction.
Amazing. That's great. Well, thank you so much. That's all we've got time for. If you've enjoyed this episode, make sure to subscribe to The Business Game and check out the playlist for the level of business you're currently playing.
Because every founder is somewhere on the game board, from zero all the way to $200 billion. Choose your level, and we'll see you next time.